Hey friends, Lucian here with the Bullish Bears team. Want to make this video on the shooting star candlestick pattern. We like this very helpful resource. So if you ever want to know what something means, go over to investopedia.com. They're awesome. They kind of break things down very simple here. So I'm going to read the definition of a shooting star and then show you some examples. So, what is a shooting star? A shooting star is a type of candlestick formation that results when a security's price at some point during the day advances well above the opening price but closes lower than the opening price. For a candlestick to be considered a shooting star, the formation must be on an upward or bullish trend in the distance between the high price for the day and the opening price must be more than twice as large as the shooting star's body. The distance between the lowest price for the day and the closing price must be very small or non-existent. So as you can see here, it kind of looks like an upside down hammer, right? An inverted hammer. So just flip it upside down would look like a hammer. And so as you can see, it's basically like an upside down looking hammer. As you can see, this distance from the high of day from the opening price is about twice as much. Now, again, we always try to tell people, don't try to be 100% exact. If it's, you know, more than twice as, or a little bit less than twice as much, if the body's up here a little bit more, doesn't mean it's still not a shooting star. You got to remember, look at what's actually happening. Don't look at the complete minutia of things. So sometimes candlesticks look like other patterns, but they're telling the same story. Sometimes, a shooting star might look like a gravestone doji, might look like another type of joji, and it could all be telling the same story of a potential reversal. So, don't try to, again, bog yourself completely down because not all patterns are going to look 100% absolute. So let's look at some examples here. Let's look at CCL, right? So CCL was moving up here. You can see a nice bull flag up here. Price is starting to broach a little bit in the overextended area. And then you see here, shooting star, right? Upside down kind of hammer looking pattern. You can see, let's see if I can find a hammer. You can see these other types, hammer again, the smaller kind of real body with a longer base. You can call this a hammer or a long-legged doji. Again, I don't like to get myself all wrapped up in it. Just know that again, when price is falling here, the bulls are starting to push it back up. Look at what it's doing. Smaller real body, longer wick or longer shadow on the bottom. Same thing up here on the shooting star. You have a longer upper shadow. Means the bears are trying to push this stock down, trying to push price down. Smaller real body at the top of an uptrend. Potential sign of a reversal. And look, it did. It fell. Boom. 1, 2, 3. Actually, this is a nice 3 black crows pattern. I'm going to have to write that down for my next video. This is really good. So 3 black crows, that's 3 red candlesticks in a row falling. So again, it's really important when you're looking at these patterns, look at the overall story that it's trying to tell you. Bull flag up. Price is on an uptrend. Price is kind of farther away from these moving average lines. The bears are trying to take control here, and they're pushing price down here. And it's showing you warning sign, potential reversal. So you got this warning sign, and then you got this one. If you didn't heed this one, you're done. All right. Again, so you can see those huge 3 green candlesticks down. Let's take a look at Microsoft, right? Microsoft's moving up here. Really, look at all this overextension, all of these indecision, small, tiny little candles, right? And then this one just jacked right up here, super overbought. Look at the shooting star, just gapped up, and you can see bears took control, pushed it down, and then you can see some of these consolidation here, and then it slowly faded down. Sometimes you might get a real quick drop. Sometimes you might get a fade and kind of slowly kind of drip kind of down. But you got to be careful. Again, these warning signs, it's hard to trade these. If you're trying to trade a stock like this, these indecision candles could really trip you up. Sometimes it's, best to stay on the sidelines and wait for a stock to define its overall patterns and trends. Like you can see here, like a bull flag, staying close to this 9 EMA line. When it starts getting out in this area, it becomes no man's land, and at some point it's going to want to pull back. And as you can see, it's just so overextended. That's why it's important to look at candlesticks, the smaller patterns and the patterns within the patterns, and then look what price is doing and how far it is away from the moving average lines. Watch for potential reversals. What goes up must come down. What goes down must come up. Meaning, if it's a good stock, price is going to naturally want to gravitate back to these moving average lines. So there's no coincidence that this price kind of came back here and it was a slow burn down. This is stayed up there for a while. But again, this thing was just, a big name company up there for a while. It's eventually going to want to pull back and come to these moving average lines. Let's look at the SPX or the S&P. Had a lot going on over here, right? So you can see price is kind of bear flagging down over here. And you can see price is moving up. You had 1, 2, 3, 4, 5, and then on 6 day, there was a 6 day, it started to pull back. Look what happened right here. This shooting star happened right at moving average line. So it doesn't always happen at the top of a trend, like where it's farther away. Sometimes it happens right at the moving average lines. And then you can see, boom, price pushed back here. And then you had the consolidation. So you can see these shooting stars and these patterns happen on all different kind of, first of all, time frames, but in different trends. If it's overextended sometimes, or sometimes when a price is moving up near the moving average lines. Again, these moving average lines, very important, as well as the candlesticks. Traders pay attention to it all together. So because we like to show several different examples and how things are not always necessarily perfect looking, but tell a very similar story, you can see here, Amazon, price is moving up. It's getting overextended on the RSI. Then you see, well, this shooting star pattern, or whether you want to call it inverted hammer or a doji pattern, this is where we like to say, don't get totally wrapped up in the minutia of, well, what is that candlestick? Is it a upside down or long-legged doji? Is it a doji? Is it an inverted hammer? What is it? Well, again, look, price is moving up, overextended. Looks like a shooting star. The example is right here. It's overextended, wants to pull back. The bears are taking control. The longer upper shadow is more than twice the size of this lower real body. It didn't close completely at the base. It had a little bit of a lower shadow. But again, it's telling the same story. Price wants to come back to these moving average lines, which it did. Bears took control, pushed it back down to the moving average line. See the story it's trying to tell? Overextended, wants to push back down. It's obviously Amazon's a very reputable company. It's overextended. It's got to get back to that equilibrium, and it's got to come back down, kind of hit those moving average lines before it either fades and falls down or moves back up again. Goldman Sachs, here's another one. So this one wasn't overextended, right? Had a couple days here. You could see this thing was just going. Let me move, zoom out a little bit here. Go in, you can see this thing's just all over the place. There's just a big mess going on over here. But again, couple green, big candlesticks up. You can see here, long upper shadow. Bears wanted to take control. What did they do? Pushed it back down, and then it failed these EMAs. You can see lots of choppiness. So shooting star doesn't have to be it exactly one way. You've seen it a couple times where it's on the top of an uptrend, another one where it's hitting moving average lines, and then here's one where there's just lots of sloppiness going on that's hard to trade. Be aware of it. Look at the story it's trying to tell overall, that the bears are trying to push the price back down. Here's another one with Citigroup here, where it's a little bit different, right? So price is not overextended. It's right at these moving average lines. Lots of indecision here. And as you can see, a longer upper shadow, close to twice amount, right? It's real close, but remember, it doesn't have to be 100% exact. Look at the story it's trying to tell. Bears are trying to take control. There's indecision over here. They don't know what to do. These moving average lines are all wrapped up. Lots of confusion. Price was kind of moving back up after it kind of sold down. Bears tried to take control. This sloppiness over here, this red candlestick, a couple green ones, and then boom, this fell. But it formed another type of pattern. You can say this is the head, a left shoulder kind of here, followed by a right shoulder, head and shoulders. Look at that, broke down. So this these candlesticks all tell a very, very important story. And that's why we try to tell people, don't get bogged down completely in what something is 100%. You got to look at what's happening. Look at the picture in the overall, the big overall picture. If you didn't see this red candlestick forming, you can see, okay, this price, the bear is trying to push it down. You can see, okay, well, this could be a potential head, because this is higher than this left shoulder here. Now let's watch what's going to happen over here. And as these start to form, you're starting to see these other patterns. And that's what traders pay attention to, especially around all these moving average lines. Very, very important to pay close attention to.
If you're not a member of our community yet on Facebook, come and join us. We are the Bullish Bears. You will see right up here, we call ourselves the stock market community, just to differentiate ourselves from our fan page over here. So make sure to like and follow our fan page as well as join our Facebook group. You will notice when you join our community, we keep all the spammers, the trolls, and the stock pumpers out. So we run a really good, clean Facebook group. So if you want to join a community of other traders around the world, make sure to come and join us. Also, too, if you have not been over to our website, head over to bullishbears.com. You'll have the links below. And you'll see over on our website, we'll have several different trade rooms over here. We have a day trade room. We have a swing trade room, a futures trade room, other great areas of support. So not only do we have our Facebook community, we also have our trade rooms that are open 24/7. So you can talk to traders from around the world anytime, day or night. And it's a really helpful resource, especially if you're new and just getting started in the stock market. It's nice to have other traders around the world as support. So we have our several different trade rooms, our Facebook group. We also do watch lists and trade alert setups every night. We send out key breakout and breakdown areas on our alert service each night. We are not stock pumpers. We do not call out entries and exits. We help to teach you to become your own trader. So again, we help to guide you, but we're not calling entries and exits because we are not stock pumpers. So make sure you read about our alert service over here if you want to know how our trade alerts work. We do also have thousands of dollars worth of free courses over here to help you get started. So if you're new, give yourself a few months to get comfortable with trading. It takes many traders, a few months, if not a year plus, before they get really comfortable. And that's why we suggest taking our free courses and then practice in a virtual account like Thinkorswim or Interactive Brokers to really get comfortable. Make a few hundred practice trades, practice in our trade rooms, talk to other traders around the world, and just get yourself comfortable with trading. And then when you're really comfortable, then start trading with real money. You'll see right here, we also have our ebook, so make sure to grab that. We have a free candlesticks ebook as well as our wallpaper backgrounds as well. So we offer so much value to our community members. So if you are not a member yet, make sure to just click the subscribe button over here and you can come and join our community. And also don't forget, if you like this video, make sure to like it, comment on it, and share it. We would greatly appreciate it. And we will see you in our community. Enjoy.